What if I told you the market moves in a predictable, rhythmic code? That hidden within the chaos of price action is a geometric pattern so reliable, it's traded by everyone from hedge funds to retail traders. This isn't an indicator, it's the foundation of price movement itself. Welcome to the ABCD Pattern Trading Masterclass. Today, we're diving deep. We're going beyond just drawing lines. You will learn how to identify the ABCD pattern with laser precision, the exact rules for entry and exit, my secret for managing risk, and how to combine it with one powerful confluence factor for explosive results. By the end of this video, you'll have a complete professional-grade trading strategy. Part 1. What is the ABCD pattern? The geometry of markets. At its core, the ABCD pattern is a harmonic price-time structure that represents a natural correction and a potential reversal point. It's based on Fibonacci ratios and the simple idea that markets move in waves. There are two types: bullish ABCD and bearish ABCD. Bullish ABCD looks like a lightning bolt. Price drops, AB, corrects up, BC, then drops again to a predicted low, D, to rally. Bearish ABCD, the inverse. Price rallies, AB, corrects down, BC, then rallies again to a predicted high, D, to fall. The magic isn't in the shape, it's in the mathematical relationships. Part 2. The non-negotiable rules and how to draw it perfectly. Rule number 1. The BC leg. This is the correction. It must retrace between 38.2% and 78.6% of the AB leg. The sweet spot? The 61.8% Fibonacci level. If it retraces more than 78.6%, the pattern is likely invalid. Rule number 2. The CD leg. This is the projection. The length of CD should be in Fibonacci extension relation to BC. Most importantly, CD is often equal to AB, a 1.0 ratio. We use the Fibonacci extension tool from B to C, projecting to the 127.2%, or most commonly, the 161.8% level. The D point is often where AB equals CD. Rule number 3. Time. While not absolute, a valid ABCD often has symmetry in time. The time it takes for CD to form is often similar to the time for AB to form. A distorted time symmetry can be a warning sign. Part 3. The professional's entry, exit, and risk management plan. Finding the pattern is step 1. Trading it profitably is step 2. This is my 4-step plan. Step 1. Entry. Do not buy or sell at point D. We need confirmation. Place a buy stop order for bullish or a sell stop order for bearish, just above bullish or below bearish, the candle that closes beyond the trend line of the CD leg. We are confirming the reversal has started. Step 2. Stop loss. Your stop loss for a bullish ABCD goes just below point D. For a bearish ABCD, just above point D. This defines your risk, R. Step 3. Take profit, TP. We use a multi-target approach. TP1. At the 38.2% retracement of AD, bank partial profits. TP2. At the 61.8% retracement of AD, our main target. TP3. If momentum is strong, we trail our stop to capture extended moves. This gives us a stellar risk-to-reward ratio, typically above 1 to 2 or even 1 to 3. This is how you win long-term. Part 4. The one confluence factor that supercharges your edge. Trading a raw ABCD gives you an edge, but trading an ABCD with confluence, that's where the magic happens. Confluence is when two or more independent factors agree on the same trade idea. My number one favorite confluence for the ABCD pattern? Key support and resistance levels. When your calculated D point aligns with a major support resistance zone, a major moving average, or the previous day's high-low, the probability of a reversal skyrockets. The market is seeing the same level from multiple perspectives. Other great confluence factors are divergence on the RSI or MACD at point D, or a candlestick reversal pattern, like a bullish engulfing, at the D zone. Let's look at two real examples, one perfect, one tricky. Briefly flip through two clean charts, one bullish, one bearish, from recent markets, narrating the rules as they apply. And there you have it, the complete ABCD pattern masterclass. This is a foundational skill that will change how you see charts. Your action step this week is simple. Go to your charts and start looking for these patterns. Use the drawing tools. Mark up 20 of them without trading. Build that pattern recognition muscle. If this video added value to your trading, do 2 things for me. Smash that like button. It helps this video reach more traders like you. Subscribe and hit the bell, because next week, we're breaking down the Gartley pattern, which builds directly on the ABCD. Drop a comment below with the word harmonic if you're going to practice this week. Any questions? Fire them down below. I read every comment.